So within the market data, what we wanted to try and do is illustrate effectively the systemic change in consumer behaviour and the huge confidence that the market is showing towards the new delivery model, and also the kind of I want it now attitude from consumers. So we've based an original or a fair chunk of this research on McKinsey, on a McKinsey report on food delivery from late September 21. McKinsey turning over 10.5 billion, so obviously, it's a fairly intensive report. Now, one of the key things, obviously, is the growth and the fact that actually this is applying in the UK as equally as much as it is elsewhere. In fact, it's one of the major growth markets, and it has continued to grow even as we've been opening up post-COVID. And some of these money raises are just crazy. Just Eat buying Grubhub for 7.3 billion, enormous amounts of money being raised, and very large IPOs happening at the same time. There's a little bit of chaos in the market, but there's still an enormous amount of interest and belief and trust within the market. What we have basically is a battleground between a lot of different platforms over a lot of different territories too. And at the moment, they are all competing very aggressively. Drivers are a huge problem we'll come to, but there are opportunities here within the verticals. And this is one of the key areas that we see that OPH can take advantage of in terms of actually building out, when you've got the infrastructure, more revenue streams. So the interesting point behind the restaurant aspect, whereby the Deliveroos, etc., have been very beneficial whilst they were locked down, what we are seeing is an element of pullback, from this Wall Street Journal article, because the money is not necessarily there. So increasingly a greater share of the market delivery is going to go to dark kitchens, while some traditional restaurants may consider not playing in the delivery space at all. This is critical because the money isn't actually there. By the time they are back to operating in a normal scenario, they're finding it very, very difficult to actually make money at the current level of commission rates through to the large platforms, but the large platforms aren't making money too. So unless a restaurant is prepared to build their own infrastructure, which most of them aren't, it's very difficult to make it to add up. Driver issues are an enormous issue. And this is not going to stop. It's been an issue for a while. There's been a lot of kickback against this whole gig economy concept. They're under huge demand because there's this kind of want it now thing, and everybody, Amazon drivers. So what the recruitment, and particularly what OPH have managed to do, is create this perspective that within their culture, the drivers are highly valued, and therefore they have no problem getting drivers because they are part of the culture. Now, interesting also within this, a Yahoo Finance article discussing the Jack Hartung from Chipotle grasping the principle that actually you need to put the prices up. The prices must go up because if the restaurants aren't going to make money and the platforms aren't going to make money, then the prices are going to go up, and they put prices up and making sure that the channel covers the cost. All of this provides opportunity as and when these platforms might come through into the areas where OPH are operating. The platform issues, again, just to reiterate the point that the money is not there. But what's most interesting is they do not want to go into these small towns because they cannot see the money. The money is in the large populations, the multiple chimney pots, whereby they can run more efficient routes. So their demand remains within the small towns, but the platforms are a long way off in terms of moving into them. Now, here are some of the issues in terms of just the levels of money being lost, despite these huge amounts of money being raised. But what's interesting here is that Will Shu, talking about Deliveroo, says that there has been no material impact in terms of deliveries on sales in the UK from the lifting of COVID restrictions. Smaller towns. High population density and big ticket order tend to make food delivery more efficient as the footprint and economic profile of delivery expands to meet more varied customers. blah, blah, blah. Basically, those who live in sparsely populated areas, far apart from one another, the restaurants they're not being served. There is an opportunity to fulfill this demand from the small towns, to get the first mover advantage. And this is one of the key things that OPH have done, is they've heavily branded their little cars and vans that they have out there, so that they are very strongly present at a time when the big platforms aren't actually deciding to go in there, and will not be for the foreseeable future. Now, the consumer is actually, certainly according to McKinsey, and we're seeing the same thing in the UK, comfortable to pay a significant premium on the cost of their order. And this is arguably because they can still sit and look at the amount that they're paying and know that it's much less than going out. And that's likely to continue for a while. It's also likely to continue even should we have recessionary pressures. Again, this reiterates the fact that they are paying more than they might be doing, than you might expect, or they might be doing for an ordinary takeaway. Now, there's a different perspective on it. In the future, there are some opportunities, and one of the key areas the platforms are looking at is trying to build out this monthly subscription service. Again, this is something that has been worked on by OPH, to build out subscription models to allow to get recurring revenue, obviously, but have a stronger position in the market as and when the bigger platforms might come through. And it builds loyalty, and there are multiple other retailers, businesses full stop, that may want to be part of that platform, particularly if there's some form of subscription that might involve free delivery or whatever. So this part of it is critical, and it's certainly something that OPH are working on. And it, for a potential buyer, building out the subscription model then dramatically increases the asset value at their exit. Opportunities at the moment, what we're having is on all platforms, menu engineering is very poor. And this is something that OPH are working on, but all the platforms are working on. Most of them are struggling to, or not struggling to, but are poor at building out incremental or opportunistic sales. The dark kitchen model, purely dark kitchen models such as Reef, is obviously an opportunity. But the issue with smaller communities is these are fake brands and may struggle to gain traction in smaller towns without this community input. Then you've got consolidation points, almost whereby you might take the box park model in the UK. Where you've got multiple different offerings through one separate food hall, and a consolidation point that is potential for OPH and their expansion is that they're a consolidation point for nearby restaurants or other retailers who don't have their own infrastructure. And there's a very large opportunity here, again, in terms of sweating the asset, in terms of this virtual concierge, where you've got a human being at the end of the phone that can be available to pick up groceries, laundries, etc. And obviously the business has their pre-built infrastructure for this. This has reached such a crazy level that Deliveroo, working with Sainsbury's, I was in Sainsbury's the other day, and a Deliveroo order for one packet of cigarettes was being delivered around just approximately less than half a mile away. But with the Deliveroo charge, so people are paying for this. People are paying for the convenience of this, and obviously anybody with an infrastructure to be able to do that, or do it along the way of a normal delivery, or at a time where it's not particularly busy, shows the very large opportunity within the whole industry. Now let's have a little bit of a look at Domino's in the UK. Very recent figures. Their last quarter, they have shown substantial growth. They have the first increase of the VAT. We've got second increase to come. hasn't had any material effect. They are looking for something in the region of 2,000 drivers this year, and that is their confidence in the growth of the delivery market and how much of it is coming through their own app, and the whole model that they're operating. July 2021, Taster, and for full disclosure, I am actually an investor in this. Principle is basically utilizing existing kitchens to create 5 contemporary brands. The restaurateur still needs to supply the staff and equipment, and the delivery is via Uber Eats and Deliveroo. So this model is essentially nothing more than a bespoke delivery software and platform with some marketing expertise, obviously, too. Now, the valuation at 61 of these virtual restaurants, and bear in mind, all they are providing is this, is 100 million. And obviously, it's negative EBITDA, and it'll be a long time before there will be some profitability. They also currently only have the ability to do 1 brand delivery per order, which is not the case with OPH. And again, like Reef, these are fake brands. One may struggle in smaller towns with no community input. They'll obviously get sales, but the valuation shows the almost crazy level of support that there is within the industry, particularly from the less, this was done through Crowdcube, the less educated investor. The further updates, November 23rd, Cracker Barrel in the US are building out ghost kitchens and new virtual brands off the back of their existing brand, exactly what OPH are doing. Their first one, Chicken and Biscuits, is in 500 of its 664 restaurants, and it's a much pulled back menu, and it's available for delivery or pickup through DoorDash, Uber Eats, and Grubhub. In other words, not through their infrastructure. They've built a second virtual brand, which they're building out as well. This Pancake Kitchen. And what they're doing, which everybody is doing, and what's happening in OPH, is optimizing the brand menus and identifying additional restaurants where they could work. And they're focusing, this is just menu managing and menu engineering that everybody should be doing. Now, in the UK, we also have Neonos, and that's Neonos. This particular location here has 17 covers just, and this brand is essentially, they've got 3 of them now. It's essentially just smaller with a streamlined menu and a sped up service. It's for delivery and takeaway. Also, Tortilla in the UK and Five Guys are trialing sub 800 square feet express brands. So there is huge confidence and growth within the UK for this model. And what this here, these are, and especially these 2, these are essentially the dark kitchen on the high street models. Market opportunities. Post-COVID, there will be hopefully this desire to support independent and local. Increased working from home means opportunities for the right operator at all times of the day: breakfast, morning, lunch, afternoon, dinner, and late into the evening. The huge brand building investment by Deliveroo, Uber Eats, etc., shows will only be increasing the ability for the consumer to think about this as being a natural way of life. Falling high street rents and the availability of locations, particularly outside London. Some of the rents some landlords are halving the rent, and that OPH have had their rent halved. So we're looking at very, very low rents in the high street. So suddenly the appeal of being in an industrial estate has shifted, because a high street presence still gives a very strong marketing perspective. This widespread adoption of app and ordering culture through all age groups, and the systemic change that we talk about that has now happened in nearly 2 years of fundamental change in the consumer behaviour and buying habits, and that want it now perspective. We've got huge growth and investment into supporting tech, all of which from an independent perspective, can dramatically help companies such as OPH. For example, SumUp, who own Goodtill, have had a 900 million, I think, dollar investment into them. So the supporting tech and the competition within that provides huge opportunities for an independent rather than necessarily just the platforms. The restaurants are likely to ease out of the market or potentially look for solutions such as with somebody who has an infrastructure like OPH. The increasingly fussy customer demands what they want and not what their friend wants. In other words, they're kind of necessarily the ability to do an order that isn't just one particular type of food, that isn't just pizza, that might be pizza and various other items and burgers and so on. Has shown this huge growth in this box park concept, but you can see how it works then also from the perspective of a delivery perspective. The reduced competition now. The last quarter, we've had 31% increase in restaurant insolvencies in the 3-month period to September 2021. In other words, sadly, a lot of the competition is slipping out of the market as the government support finishes. Huge opportunity for first mover advantage, smaller towns, whilst platforms battle in the cities. The threats, well, staffing shortages are there for everybody at all levels. But the simple model from OPH without chefs, high quality front of house folk, but also their your unique driver model puts them well ahead. Inflationary and recessionary threats are certainly a case for everybody, but the pricing will have to go up as has been seen and evidenced to cover that, and those plans are in place. This huge brand building investment by Deliveroo, Uber Eats, etc., just shows this market confidence in it, but it also sits as a threat in terms of the ability for them to have huge budgets to push their offer. But OPH are very comfortable that when they come into the towns that they're in, their model, because of the simplicity and the margins that exist within it, can easily work through those platforms as well. We have a rising cost base and supply chain issues for everybody, but a lot of this is covered, and OPH are very comfortable to deal with that. Reduced government support for everybody, but is not affecting in any way OPH. And there are issues. They're working on the solutions for the increased VAT with a number of price increases, and the entire industry is very comfortable to work on a number of different price increases has to work on price increases, or we're going to get more ongoing insolvencies. The ongoing insolvencies are going to happen anyway. So, the conclusions. We have a systemic change in UK consumer behaviour towards the delivery market. The opportunities are immense for somebody with infrastructure. We've got substantial demand and opportunities in pre-Deliveroo markets. There is huge funding interest for delivery platforms and new digital models, all of which shows the market confidence but also benefits. The traditional restaurant market is likely to struggle. All major platforms continue to fight for profitability, and therefore, as they battle away in the large metropolitan areas, you'll end up with some of them not actually working at all. There'll be consolidation. As they move towards profitability, and the general perspective off the back of that being that there will be increased costs to the consumer one way or another if they want to continue with this model. Driver shortages are a major issue, but the culture that exists within OPH allows that not to be an issue. And we've got this ongoing hospitality shortage for poor operators. Good operators such as OPS are not seeing that, but also this is likely to ease as we have more insolvencies in the marketplace and more people out of work. So the conclusions are, for a business such as OPH that have built their own tech and physical infrastructure, the opportunities are enormous.